Eurodollar has made its largest daily candle in over 10 years' time, and the further ongoing uncertainty within the United States causes further weakness from the dollar, but also further strength from risk-off pairs such as the Japanese yen and the Swiss franc. Good morning, guys. My name is Fabio, and today we're going to be diving back into the major dollar pairs and see what the potential trade opportunities are for this day ahead. Now, looking at EURUSD, we can see a very strong bullish daily candle close as of yesterday. Now, after a long period of accumulation here at the low, which we all remembered, where a lot of people were saying, okay, we're going to go down into parity, we can now very clearly see that from a weekly perspective, we have now swept the range low over here. After sweeping that range low, we saw the reversal pattern in towards the highs in the form of a what? Of a change of character. Now, I mentioned this in yesterday's video as well. For a reversal to happen, you need two things. Number one, you need a change of character, and number two, you need liquidity or an area of supply and demand. Now, in this particular example, we had an area of liquidity over here, so underneath that low, this is then your area of demand or your so-called buying zone. And then after that, in order to buy, what do you want? You want that change of character. Now, did we get that change of character though at the lows? Yes, we did. This here was your change of character high that broke this low. So what you see is the push down, then a reversal up, retracement, upside continuation again, retracement, upside continuation again. So EURUSD here on the weekly time frame overall is very, very bullish. Now, after yesterday's daily candle close, we can now say that this is your fractal break, and the current fractal low that needs to be respected in order to achieve further upside is this low over here. So this dotted line. Now, your overall area of weekly demand that is in control is now this box over here, and anything inside of that green box is a potential good buy back up higher in towards the overall range high. So the way that I look at EURUSD at the moment is more from a range perspective. I can very clearly see that we now have taken the range low, and we're now potentially looking at a further rebound up higher to take out the range high, take out these equal highs over here. So definitely looking for that further upside continuation into the upcoming weeks with further uncertainty surrounding the dollar. If we quickly look here at Bloomberg, we can very clearly see here that the euro is likely to be one of the major beneficiaries of a slowdown or reversals of these inflows because of the degree to which they are or were provided by the euro area investors. So the market or the people on Bloomberg are also stating that further euro strength is anticipated and is expected due to the fact that investors are now more concerned about Trump's policies potentially harming the US economy and reversing sizable inflows into dollar assets of recent years. So these worries sent the Bloomberg spot dollar index down by the most on record Thursday. So this is currently causing EURUSD to push up higher, and I do not believe that this uncertainty surrounding the tariffs is going to go away like this. Yesterday, the United States government did state that a lot of countries are now asking to negotiate. And if there is more information on these negotiations coming out about the tariffs, or for example, a tariff reduction in, let's say, exchange for something else that will benefit the United States, this could cause dollar strength. So do keep an eye on that. But yeah, EURUSD overall only interested in buys, not interested in sells myself. Yes, we are inside a daily area of supply. So here to the left, by the way, this is your daily buy up before the strong sell down. It is a strong area of supply. Why? Because it took liquidity first before reversing in towards downside. So you can see here, it grabs liquidity above this high, and then the reversal comes down. This is why this is a strong area of supply, because a supply zone that grabs liquidity is always going to be a lot stronger. So that's why we're currently seeing a sizable reaction. But yeah, in my personal opinion, even if we do see a further retracement down, I'll be looking for further upside. Myself, not interested in looking for any sales on EURUSD at the moment. Could it drop down lower? Yes, obviously it could, because at the moment we have this buy before the sell as your supply zone. We have some equal lows here, so it would make sense to see a further push down, but I'm only personally interested in longs from a fundamental perspective. Now, looking at the dollar. So the dollar is currently rebounding from that weekly area of demand, which we mentioned. So you guys know it. This is the weekly demand zone, which we've been monitoring for quite some time. We've been calling this dollar reversal already since the highs over here. So we can see that overall reversal in towards the downside after here, the initial change of character. Here again, a change of character low broken. And now again here, a change of character low broken. So the overall market structure is definitely bearish in towards the lows. At this point in time, this is now your supply zone that is in control. The immediate bias is still for the downside. I'm still looking for around that 100 level to get reached for us to take out these lows as well. If we do see a sizable reaction, then obviously I'll be looking for further shorts from this area of supply in towards next week. So that's what I currently have for the dollar index. It is, personally the area of demand, or excuse me, supply that I'm looking at. And if we do see that retracement up higher, then just look for further downside continuation, or it will just head down lower. But we'll need to keep an eye on the lower time frame for that. On the 4-hour time frame, not really seeing anything interesting. On the 1-hour time frame, also not seeing too much interesting. All I can say is that, for example, this here is a 1-hour supply zone. This here is a fractal low break. This here is a fractal high break. So push down, pull back, push down, push up. This is now the fractal high. This is now the fractal low. So this is your bullish range. We saw the retracement down, back down in towards demand, and we're now currently pushing up higher again. So looking for a push in towards this supply zone, and then again further downside, potentially incoming. So that's currently what I'm looking for on the dollar. Still further downside to be expected. But do keep in mind that the dollar could rebound if trade deals are going to be starting to be closed. Now, going onwards into AU saw a further push in towards the downside. Personally, I have put this position or closed this position at break even. The main reason for this is because there is just too much uncertainty in the world at the moment. This is causing AUD pressure and NZD pressure as well. So these risk on pairs such as AUD, such as NZD, such as CAD, these are really, really being hit hard by all of this uncertainty. So you definitely want to be positioned in the yen, in the Swiss franc, for example, and the euro, as these currency pairs are currently just the stronger ones. Now, looking at this, there's just not much to say. AUD/USD is just definitely consolidating at the moment, and once we reach some lower levels, maybe take out some more lows, then I'll be reevaluating the situation and looking for longs again. But the situation needs to change at the moment, because at this point in time, we're just going up and then we go down, we go up, down, and then we just range, we take out lows, we go back up, we go back down. So this is just consolidation, and there's not much that we can do with it at this point in time. You can all see it. AUD/USD is just simply consolidating. So let's personally, I'm personally just going to sit this one out for now, because despite the technical analysis looking good, if the fundamentals are not in line, then it just does not make sense to trade this. Staying away from AU, going into GBPUSD, we can see that GU is also retracing in towards the lows from that liquidity high, which we actually mentioned in yesterday's video. So here again, you can see all of these descending highs. We take out the liquidity, and then that is where we start reversing in towards the downside from. Overall, look at the 4-hour time frame, and you'll want to be waiting for the market to retrace back into this range over here, and then from there we could look for some potential buying opportunities once again. There is some pressure on the pound. I need to find out why. I'll be reading about it later today and updating you guys inside Discord. But overall, what you now want to see from GBPUSD is obviously slow down. Now the trend is in towards the lows, so just wait for that trend shift to happen. Wait for like a double market structure break, and then get in on that bullish order flow once again. This retracement is perfectly fine. Just look at the swing low into the swing high, and you can see that we're now nearing the 0.5 fib. So then identify those potential areas of demand. Now we have a lot of them here. For example, we have these imbalances over here. So wait for the market to, let's say, take out these lows, tap in towards this demand zone, but then don't just buy, but wait actually for like a double market structure shift break, like I just mentioned. Look for a demand chain to be created, and then get in on potential buys. That is what I personally would be doing. And in the meantime, keep an eye if there's any trade deals between Great Britain and the dollar, because the UK has been mentioning that they are looking for these trade deals with the United States. But overall, you can very clearly see this swing high here is currently causing it to push back down lower. Look for longs within that area of demand. Going into NZDUSD, and then we're going to also have a look at Dollar Yen. So NZDUSD, very similar to AUDUSD as well. Overall, it's just really being screwed by the fundamentals at the moment. So despite the overall market structure looking good, right? So here we had the break up, here we had the break up, here we had the break up. Here again, it seemed we were going to have a break up. This is a swing low, this is a swing high. We take out the lows over here, and then from there we reverse back up higher. It took out the high, and then from there, boom, it starts crashing in towards the downside again. It's very similar to AUDUSD. It's not a pair that we want to be trading at the moment until there is a little bit more certainty within the market, because this could still, in the immediate short term, let's say the upcoming week or two, still dump down a lot lower if uncertainty remains within the market. So personally, if you are looking to trade this, then shorts would be the better option for now. And then going into dollar yen. So dollar yen is a better pair to trade at the moment because the yen is extremely strong. We can now see that we've come down lower into that weekly demand zone, which we've been talking about. So first of all, the weekly demand is this sell before the buy over here. We're now inside that weekly demand. Overall, what we have been seeing is that here, the buy before the sell holds. Then here again, the buy before the sell holds. And now again here, this is your buy before the sell, which is your weekly area of supply. Then going into the daily time frame, we can see that your daily area of supply is a lot higher over here. So if the market does retrace towards there, you could look for further shorts in towards the downside. You could also just take kind of like this entire buy before the sell here. I know there's a lot of green zones now on my chart, but overall what I'm referring to is this daily area of supply. For myself, dollar yen short still makes sense as the yen is strong, the Swiss franc is strong, and you want to be longing those two. So that means dollar yen shorts, dollar Swiss franc shorts, okay? So looking only for the downside from dollar yen itself. That is pretty much what I'm looking for. And again, what it could just simply do, guys, because with dollar yen, you can be a little bit more aggressive. For example, take out these highs and then just look for the next short down lower again. If it does retrace up higher, just wait for the overall order flow to shift, and then look for the double breakdown again, and then get into short positions once again on the overall supply flow. So I would only be interested in further dollar yen shorts, but I'll update you guys inside Discord if I see anything interesting change. And then we also have, of course, gold. So gold itself dumped down lower in towards that daily demand zone that I mentioned in yesterday's live stream. So the overall daily demand zone is this sell before the buy over here. We tapped in towards it. So a lot of manipulation going on gold as of yesterday. Overall now again, what we had here was a liquidation of this high. Then what you form a supply zone on the buy before the sell. And that is currently pushing the market down lower. So for now, wouldn't really be interested in getting into buys on gold. Again, we need to keep an eye on what the market is going to be saying. Gold has some downside pressure from the overall announcement that came out last night or somewhere during the Asian session that these countries are all coming to the negotiation table, but I'll be keeping an eye on. Obviously, there is still a risk of sentiment within the market, and one daily candle close doesn't mean that we are now completely bearish, but there is potential for the downside in gold. But for now, personally, gold is one that I'm staying out of due to the manipulation, because what you can see here is that we take out this high first, then we take out these lows second, and then we just rebound back up, kind of like to the EQ, which is the equilibrium. And if you draw in a fib from the high to the low, you see that that's pretty much just the 0.5 fib. So the market is not really moving anywhere. It's just taking lows and taking highs. So it's very risky to be kind of like in these kind of positions. You really want to be trading in a more trending market. Obviously it's trending up higher, so that's why I'm not really a big fan of shorts at the moment, because the overall market structure is still extremely bullish, right? Despite the shorts looking like the better option at this current moment in time. So yeah, that's that. For the rest, guys, just want to remind you to keep a level head within these uncertain markets. Where there is uncertainty, there is opportunity. There are a lot of opportunities at the moment, especially if you're, for example, interested in stocks. Keep an eye on what companies, for example, are exempt from tariffs. Look at pharmaceutical companies, for example, pharmaceutical companies or pharmaceuticals are being exempt from certain tariffs, which could cause them to, for example, their stock prices to go up. So keep an eye on, for example, Pfizer, Novartis, and some other companies. Also keep an eye on companies with very large debt, because the yields are currently going down, which means that it is very likely that it's going to be a decrease in interest rates, or interest rates are going to be cut. And this is now causing real estate companies with very large amounts of debt to start performing very, very well within the stock market. So there's opportunity, guys, but it's up to you to do your homework and find it. Here I left some clues for you that you can use to your advantage. And keep reading, and if I see anything interesting, I'll drop it inside Discord. Thanks for watching. Have an amazing trading day, and we'll speak very, very soon.